everyone. Welcome to our webinar for today, How to Invest in the Hotel Industry. I am Bahia Shabazz. I am the Executive Director and founder of Brown Girls Do Invest. I just wanted to quickly jump on and introduce our organization. We truly appreciate the presenters for tonight, as well as each and every one of you taking the time out to participate in tonight's event. And I hope that you ladies, as well as any gentlemen who are on, get a plethora of information. Please do not hesitate to present any questions at the end. And if you feel as though you do not want to present any questions at the end, you're more than welcome to email us at browngirlsdoinvest@gmail.com or whatever correspondence Epiq Collective provide to you so that you can correspond with them as well. Just briefly, Brown Girls Do Invest was established in February of 2016. In October 2016, we became 501c3. Our mission is to help young ladies from the ages of 12 years young all the way up to 112 years young, how to invest in the stock market, how to invest in real estate, as well as how to acquire multiple streams of income. So we were delighted when we partnered with Epiq Collective to teach each and every one of you how to invest in the hotel industry. We are going to offer so many webinars this year, as well as courses. We have a virtual summit coming up. And please do not hesitate to visit our website, browngirlsdoinvest.org, to sign up for the newsletter, as well as follow us throughout social media at Brown Girls Do Invest. And we're going to go ahead and, oh wow, what is this that popped up here? We're going to go ahead and start the presentation whenever you ladies are ready.
Well, thank you so much, Bahia. And thank you again, Brown Girls Do Invest. We really do appreciate the partnership and the collaboration. My name is Davonne Reeves. I'm one of the co-founders of Epiq Collective. We are a commercial real estate investment fund. We focus on hotels and multifamily. And we wanted to do this presentation because our goal is to encourage more African-American women to invest in hotels. So we're going to just talk high level, just a nice introduction on how you can invest in the hotel industry. Some of the discussion points that we're going to go over today, we're going to talk about us. We're going to go over commercial real estate, the lodging, the acquisition process, and why you should invest. And then we'll also talk about, we'll also leave time open for questions and upcoming project. And the reason why, because there's been a disconnect, and we've been priced out, and there's no ownership, and as far as no access. And so that's why we wanted to have this discussion and just to start the conversation and diversify your portfolio, investment portfolio, when it comes to real estate investing.
So hi, everyone. My name is Jessica Myers. I am the co-founder of Epiq Collective. And as Davonne mentioned, you know, I've been working in real estate for 5 years now, doing the single family renovations and real estate. And Davonne and I actually connected at Georgia State University. And some years ago, I'm not going to say how long, but we connected a while ago. And while I was going through the journey of single family development, Davonne, who has the experience in hotels, was like, hey, you should definitely look in the commercial side. All of the work that you're doing is for, you know, you would get a larger piece of the pie when it comes to the end. And you can definitely build a legacy. And I was like, oh, okay. You know, it went through one ear and out the other because I was so into single family. But when I opened my eyes, as she mentioned, there was a disconnect. You know, there weren't many people of color in this space. There, you know, there weren't many groups that allowed you to invest in these larger projects. The hedge funds, we didn't have access as we weren't accredited investors. So we didn't even have access or a seat at the table. So that's why I was like, you know what? If there is a void in the industry for, you know, for everything and the opportunities, we have to be the solution. So that's where Davonne and I partnered together to create Epiq Collective. Because I'm like, we're going to work on these multi-million-dollar projects collectively, where investors can come in and invest $5,000, $10,000, $20,000 and take ownership in a multi-million-dollar project. Because it can be a little overwhelming when you think of the schematics or the numbers of a hotel. Like, oh, I'll never be able to afford a hotel on my own, or it'll take years to settle up. Or maybe that's something I should do in retirement. But I thought that there is way too much access and opportunity to just have to wait until those opportunities come. So we have to create those opportunities for ourselves. And so that's where we had the discussion about creating Epiq Collective, which is about doing epic projects collectively together. And so Epiq Collective is about doing real estate together, where we can invest in hotels, multifamily, and we can invest in large projects and give people access into these tables by working on them together. So that's what we're going to dive into a little bit more today. Davonne, did you want to speak more of who you are and how you came to be a part of this project?
Absolutely. Thank you, Jessica. Well, again, my name is Davonne Reeves, one of the co-founders of Epiq Collective. I have over 10 years of hotel experience. My background ranges from operations, feasibility studies, hotel development, and asset management. I was in corporate or working a traditional 9-to-5 for close to 10 years. And about 2 years ago, I decided to venture out into the entrepreneurship world, and I started my own company called Davonne Group as a consulting firm, and we focus on hotel development consulting and acquisition consulting, primarily for first-time hotel buyers. I recently wrote a book. It's called Tidbits for the Emerging Pineapple Professionals, for folks who would like to get into the hospitality industry and would like to expand or grow or excel in the industry. Typically is gauged for entry-level folks or college students. And most recently, I founded Epiq Collective, where we focus on hotel investing and multifamily investing. Jessica, you want to share your story and how you got into the commercial real estate?
Yeah, so I mean, as I mentioned earlier, I'd already been in the single family space, had already flipped well into the millions of real estate assets. And as much as I thought, that was to have gotten to that point, Davonne was like, you realize your efforts will be go a lot further and exponential in the commercial real estate space. And being open, just as you guys are open today to this conversation of what it takes to create a seat at the table, is what opened my eyes, because I realized that so what we would do in the single family arena is we would purchase a property and leverage our access to the banks. The banks will then come in and cover the renovation of the property so that we can sell the project at retail price. And so once we conducted all of the work and did all of that, it left our out-of-pocket expenses roughly between $30,000 and $40,000 per project. After working with Davonne and getting experience into the hotel industry, that's exactly the same process that they employ, in that you can look at a hotel that's underperforming, knowing that it needs a little bit of renovation, leverage your access to banks and private capital and funding. And then once you bring the property up to standard, you now can bring on a major brand. And then that is what we call a value add opportunity. So when I realized that it was the same thing that we do in the single family space as the multifamily space, except you're talking about cash flow opportunities, you're talking about ways to grow your capital even further, it was definitely a no-brainer. And that's why we partnered with Epiq Collective to do real estate together. So we're just gonna jump right in. And one of the things that that most people, when they talk about a legacy, when they talk about jumping into the hotel space, a lot of times we have to make the distinction of a passive investor versus an active investor. Because most times people are like, hey, I want to be a real estate, or I want to go into investing, and they don't necessarily think through what all it takes. And that is the importance of having a full service team like Epiq Collective that can not only seek out opportunities to invest in, but having the team that helps to manage the day-to-day of the actual process. So that's why I always want to delineate whenever I'm having this conversation in real estate, the difference between a passive and an active investor. So passive investor is someone who you may call that they give their funds and they put the money behind an engine that will manage the project for them. Passive investor is not on site, neither are they worried about the day-to-day. The passive investor collects the check, but they invest in the team that does. The team that does is called the active investor. Active investor is at the job site consistently writing reports to the investors that have patronized or put money into the operations. The active investor is also responsible for making sure everything flows smoothly from beginning to end. It's not that we avoid problems, but it's that we know how to work through them. We're boots on the ground into the project to make sure that everything is flowing the way it's supposed to and the way you envision. So a lot of times if people don't make that delineation, they say, oh, I'm an investor, and you don't determine whether you're a passive or active investor. That's how you get into situations where things go awry and you don't know what to do, because you may not have assessed what all capacity do you have to jump into investing. So that's why even before I jump into the meat and bones, I always want people to determine, is this something that I'm ready to do full time? Because yes, there are plenty of opportunities to make money in real estate, and there are plenty of opportunities to grow your portfolio and your experience. But you have, as a passive investor, you may have to hire an active investor or have an active investor on the team. Someone with your interest that holds your interest into the project needs to be on the team to make sure that everything is flowing as a success. Because now it's one thing to talk about 10 to 15,000 on the single family level, but it's another thing when you're talking about millions of dollars on the commercial side of things, and definitely dealing with hotels. So it's always good to know, what type of investor am I? Am I someone that just wants to invest monies and let the other people go? Or am I someone that wants to be hands-on into the day-to-day and really build a career around it? So it's important to make that distinction, because you have to hire an active investor and make sure that somebody is actively watching your project. It's no such thing as just putting money at a project and walking away. You definitely want to make sure that you have a vested interest, or someone on your team does, to make sure that the project is secure in what you're doing.
Jessica just talked about the difference between an active and a passive investor. And we just wanted to also give you an overview of the different commercial real estate classes for those who are unfamiliar with commercial real estate. We're going to talk a lot throughout this presentation about hotels. They're also office. We don't deal too much with the office space as far as office or something like, WeWork or office building. Retail would be anything as far as with shopping or restaurant, industrial factories, and then multifamily. So Epiq Collective, we focus mostly on hotels and multifamily as far as with the different classes of commercial real estate. And for the purpose of this, we just really wanted to stay focused on hotels, because a lot of people, they don't realize that you can actually invest or own a hotel. And Jessica is going to go over the lodging overview.
So while there are multiple different facets of making money on the commercial side of real estate, we like to focus on hotels. Why hotels? For one, if we looked at an apartment building, for example, your rent is typically anywhere from $1,200 to $2,000, depending upon where you're located, and it stays at that fixed rate through the duration of your lease agreement, which can range anywhere from 9 months to 14 months. And it's stuck like that. And even if you renew your lease, sorry about that. Even if you renew your lease, they will get an average of a 3 to 8% increase depending upon where you stay. In the lodging industry, with tourism being so high, you're talking about $1.1 trillion spent in the lodging industry. 232 billion is what people are spending on average as they're traveling and going to different places. So now I can charge in my hotel, and I can vary, and based upon where the economy is at that time, I can now change my rates so that I can have more impact or more cash flow even after after the tenant has agreed to stay there during that time. So for example, when you sign a lease, yes, it's guaranteed funds, but I have no flexibility to take advantage of the influx in tourism or events or conferences that are going on in the time. So that's what hotels and short-term rental give you access to. So yes, we, the performance obviously talk about the baseline of what you're projected to receive, but you're more easily available and ready to go over your budget or what you anticipate getting, just because as season change, like for example, the Super Bowl was held here in Atlanta last year. That surged our economy greatly, and the people that were involved in the short-term rental and lodging industry were able to benefit from what was spent here in Atlanta on lodging and these things. So not only are you able to make an impact in the short-term rental space, and you're able to capitalize off of different things impacting the market, but now you're able to create jobs. We're able to create jobs, and really that's how you really get people to get into home ownership. And that's how really what helped Atlanta become the metropolis it is today, from the creation of jobs. The more jobs that you create, the better the economy, the higher the tourism, because people want to come. They want to see the flourishing economy. They want to know what's going on. We have a lot more corporations that are here, and that a lot of them use, hotels for corporate housing. So the lodging industry is really taking off a lot more than other sectors of real estate. So that's why we made this our focus. But here again, the problem was there was no diversity. That's why we're breaking into this. We're partnering with people of color and the brown girls so that we can do this together to get access, because only 60% of hotels are owned by small businesses. So that's where we want to make sure that we provide access and seats at the table so that we can help diversify, what we're seeing out here in the industry.
Now, as Jessica just mentioned, 60% of the hotels in the United States are owned by small businesses. Over 50% of the hotels in the United States are owned by Indians, and less than 2% of the hotels in the United States are owned by African Americans, and the ownership among the African American women is even smaller than that. So again, our goal is to increase that number, to increase the percentage. Now, there are several types of hotels. We recommend for those who want to invest and want to get started, we recommend that you invest starting off in limited or select service. Your limited or select service is limited or no food and beverage, meaning it's no full restaurant. You may see a bar, you may see a gift shop. Think about a Courtyard by Marriott, a Hampton Inn. That's what you would consider a limited or select service. Just think of something with limited amenities. It won't have room service. It won't have a full restaurant or a 3-meal restaurant. That's what you will have in your full service hotels. Now, your full service hotels, think of your Hyatt Regencies, your Ritz-Carltons, Marriott Marquis. Think about, they have all the amenities. They'll have a concierge, they'll have a spa, they'll have, a VIP club. They'll have a full restaurant, meaning that they'll have, breakfast, lunch, and dinner. Just think about that when you think of full service hotels. Those hotels are typically more expensive for as far as from a cost perspective, because they have more amenities and because it requires more jobs. Limited service and select service, they don't require as many jobs because they don't have as many amenities as full service hotels. Then other types of hotels are your economy, which would be considered like your Super 8. Your luxury hotel would be considered, your Mandarin Oriental, typically 4-star or 5-star and above. A little bit more expensive, not a little bit, a lot more expensive to build and to maintain, because you're offering an extra level or an additional level of service. So you have to have more jobs or more staff to make sure that you're able to meet the services of the guests. Extended stay would be like your Marriott Town Place, or your extended stay properties, meaning that you can stay there for an extended period of time, has a kitchen in the living room. A lot of people who travel on business or with the government. They typically stay at these hotels maybe 3 to 6 months at a time. Your boutique hotels, meaning that they're smaller, probably, 50 rooms or less, or 80 rooms or less. Independent hotels, meaning they're not branded. Branded means your major brands such as Marriott, Hyatt's, Hilton's, IHGs. Those are what you consider your premium brands. An independent brand means that it's not affiliated with a major brand. It has its own name. For example, the Ardmore Hotel in Atlanta or in New York City, there are a lot of independent hotels where there's not affiliated with the flag.
One of the things that that is important to note about hotels is that really it's a hotels are actually a property management company. There's a small percentage of hotels that are actually owned and operated by the brand. And this is a key note because when you look at hotels in the sense that they are property management companies, you now as the owner, it's up to you to find a hotel that is undervalued, that you now can add value to bring on a Marriott brand or a Hilton brand or higher brand. And those are what we call value add opportunities. So we're going to jump right into the acquisition process. And what that means, like we were saying, if you find a hotel that's underperforming, maybe it has a name like Chauffeur Inn or, something else that's not one of the mainstream brands. This means opportunity for you, because if it's been underperforming, that means that the owners more than likely are tired of dealing with the situation they're in. They're running out of money. They're running low on funds, because most hotels have a 5 to 7 year turnaround period before you're putting money back into the hotel to fix it up. And so a lot of times you get worn out owners that don't feel like taking the time or don't no longer have the funds to renovate these properties. So now they're at their wits' end. That's where you can come in as a solution. Those are the opportunities that we search for as Epiq. We're looking for hotel operators that have these properties and they're at their wits' end. They're in desperate situations. They are not a big name company. They don't have the property management of these larger brands. So that's where we're able to come in and be the solution. That's where we're able to come in and say, you know what? Let us buy. So let's say that the retail value of this hotel is $1 million. Because you aren't able to put the money into it to get it to operating at its highest peak performance, let us purchase it from you for a percentage of what it's actually worth. Doing that is what allows you to get into a value add opportunity. So once you do that, you assemble your team. Now, who's on the team? For one, that's where we made the delineation earlier of an active versus passive investor. So the passive investor helps to provide the capital to renovate the project. So you assemble your team to make sure that the capital is there. If it's yourself and that you're able to provide the capital to handle the purchase and the renovations, that is perfect. If not, you can partner with other hedge funds, or you can partner with active investors like me and Davonne. So what we've done is we've gotten a hotel, or maybe you've gotten an opportunity and you bring it to our team. Now we can really help you to execute and get things moving to turn this baby around. We then leverage our networks with our private lenders. And by private lenders, because of our experience and because of different things that we have, they tend to offer us different terms. So then we go through the underwriting process. And that is a process by which our lenders are vetting the deal and Epiq Collective is vetting the deal. So your active investors on site are running through, making sure that the numbers make sense, making sure that we can guarantee your return of cash invested, and make sure that we know all the factors that are involved. This is how we develop our criteria of what we look for a deal. That is the importance of having an active investor on the team. After we've gone through all of that, we have our team players there. We've gone through the underwriting process. Now we're able to offer a submission on the actual property. So that's where we go to the person that's been having the desperation into the deal. And we can say, based on our numbers, here's where we can come and what we can offer for this deal. So for example, let's say their project is worth $1 million, but it takes about $300,000 worth of work. We make sure that our offer, through our underwriting process, we evaluate how much we can actually offer for this deal. And once you know how much you can offer based on your criteria, mind you, everyone has to go through their own underwriting process. Just because something is a good deal for me does not mean it's a good deal for you. So you want to make sure that you know what those numbers need to be when it comes to writing out your plan of getting involved in real estate. So through the underwriting process is where we base our criteria that now we can offer that. Now we can put in an offer. And that's when we enter our due diligence period. One of the major things that I had to adjust to now being on the commercial side is that the due diligence period in the single family realm is no more than like 14 days. You know, maybe on the retail side, you're looking closer to 30 to 45. But imagine how much scrutiny has to go on one single family home times 45, times 100. All of these multiple units. It's definitely going to take a lot more due diligence. And that's why you want to make sure you have your team assembled before you get into the deal. Because on your team, and which is where Epiq Collective, we have access to a full construction arm that will go in and vet the deal and the viability. You also do designing the architectural plans if you plan on making any changements or adjustments. You also want to have your inspection. You want to make sure that a professional hired licensed inspector evaluates every nook and cranny of what you're buying so that you know and you have your numbers of exactly how much you need to put into the project to move forward. All of these things come from your due diligence. And one of the major things that any lender is going to ask for is an appraisal. And an appraisal, you're talking about appraising 60, 70, up to 100 rooms in a particular hotel. So that appraisal itself may take a few weeks to turn around. And an appraisal on a commercial property in a hotel is a little different than what you do on the single family side. So once you've gone through all of your due diligence, which making sure that all of your underwriting and all of your criteria is met, once you finish completing the due diligence period, that's when we can now head to the closing table. Closing table, while a lot of people may celebrate of how hard it takes to get there, for some people, it's actually the beginning, because that's when you actually put in the work to make the project happen. When you get to the closing table and setting that day one to add value. And now remember, when we purchased the hotel, or when we sought the hotel, it was a value add opportunity. There was a lot of work that needed to be done. So while I'm still renting out the rooms, let's say my rooms are $70, $80, $90 a night. I'm still renting out my rooms. Now that I'm renovating block by block, floor by floor, room by room, I'm now able to transition this hotel into not only take it from an underperforming hotel, now I'm able to charge $150 a night. Now I'm able to charge $200 a night. Now I'm able to charge a lot more. And now we took this underperforming hotel into a performing hotel. And that transition is what we like to call added value. So now I can attract a larger brand. I can attract the Hyatt Regency. I can attract the Marriott. Those are those larger brands that I can now attract. So where my property was initially worth $1 million, by bringing on those larger brands in that property management company, my hotel can now be worth exponential profits. So this process is generally about a 2 to 3 year process to stabilize the property. And that's to take the hotel through a complete transition. Some make it sooner, some make it longer. But that's where you really have to understand that the hotel process is definitely a long game. It's not meant for short-term investments. You want to make sure that you block out that time and have realistic expectations if you go at it alone or even with the team, that will take time to stabilize and turn the property around. But it all starts too with finding someone that is in desperate need, and there are those opportunities to add value. So like I said, you may find an off-brand hotel. If you do, turn your car around, go get that hotel name, reach out to the owner. You never know where they are and where the opportunities lie to transition that property, and you can acquire it, and it can really be very fortuitous for you.
Well, I'm sure you all are thinking, as Jessica just walked us through the acquisition process. Well, what does she mean by as far as hotel search? There's so many different ways as far as that you can look through a hotel. It's not like you would if for folks who are in residential where you just go through an MLS, or there's different websites where you go through LoopNet, Acquire, 10X, or reach out to brokers who specialize in hotels. Those are ways that you can find hotel search, that you can search for hotels to purchase. Assemble a team. As Jessica mentioned, Epiq Collective will be active investors, meaning that we will manage on your behalf. But if you decide that you want to become an active investor, or if you want to know exactly as far as what we do when it comes to assemble a team, we put together as far as an A team, meaning a lawyer who has experience in hotels, meaning they know how to negotiate contracts as far as management agreements. We would be the asset manager, because we have experience in, but we also want to find a brand that will be profitable for the particular hotel, as well as looking for a broker who has experience in hotels, because that particular broker would be the one as far as for coordinating to get the hotel to close. And throughout that underwriting process, you want to make sure that you have a team together who understand the hotels, to understand the financials, to make sure if the hotel makes sense from a profitability standpoint. Because as Jessica mentioned, it's more of a longer term investment, meaning you're holding the investment for 3 to 5 years. And so for the underwriting process, you want to make sure that it's a good investment. And then that you mentioned as far as you offering your submission or submitting it with your LOI to the potential owner or to the other broker. And if they receive your submission, that's when you go through the due diligence, more of a detail. As Jessica mentioned, you do the property condition assessment, which is an inspection. This is where during this process, during the due diligence process, you're getting the hotel as far as ready, pulling the documents ready for the transition. Hotels is considered an operating business, so it's a different real estate class because it's a business that operates. So if there are any leases involved, meaning is, if the copier, does that belong to the owner, or is that going to belong to the new owner? The tiles that are there, is that going to belong to the new owner? Is that going to belong to the old owner? So all of that is the part of due diligence process while you're working with the bank to get your hotel to closing. And as far as with the hotel transitioning, it's pretty much like we said, transition. You could be checking in the hotel tomorrow and the hotel is going from one owner to another. So during that transition process, you just want to make sure that it's a seamless process. It can go from a Courtyard to a Hampton Inn, and from Monday to Tuesday, it could be a Courtyard by Marriott on Monday and then a Hampton Inn on Tuesday. And it's still, the check-in process. The only thing that's changing is the brand and the owner. And so as far as the closing and the due diligence process, you just want to make sure that the hotel transition, as far as if it's a new management company or a new owner. So we talked about, hotels, and we talked a little bit about the benefits, but we want to go more into detail of why, it's important, or some of the added benefits is investing in a hotel. Job creation, is Jessica mentioned before, over 8 million, the lodging industry contribute over 8 million jobs in 2018. Generational wealth. This is something, a legacy that you can share with your children or your next generations as far as long-term wealth with investing in hotels. Investment diversification. Some people invest in stocks. Some people invest in different real estate classes. Now you can add hotels to your real estate, to your investment portfolio. Passive cash flow. Depending on how the fund or how you invest is structured, typically get quarterly dividends, or you'll get your cash out depending on how long the term is for. But it's definitely passive cash flow because you're not actually managing operating the hotel. That's where your that's when your brand or your management company is coming in and they're managing the day-to-day operations. So, which is typically about, 2 to 3%. And so you don't have to worry about checking in the gas. You're like, oh my gosh, I just want to own a hotel, I don't want to be checking in and out guests. I just want to take advantage of the benefits, like getting the discounts. And that's where your management company will come in, and they'll manage the day-to-day operations, and you just pay them a percentage of the revenues. Direct asset participation, equity, and returns, meaning it's direct equity as far as when you invest in a hotel, and the returns. And of course, something that we all love, special owner rates. When you are a owner of hotels, depending on the brand, majority of the brands, you do get discounts for staying at certain properties. That's one of the benefits of being a owner.
And one of the things too, where we build the seat at the table. So for example, if you have as small as 10% ownership into a hotel, you are now an owner. But 10% to these multi-million-dollar projects can sometimes be hundreds of thousands of dollars. So that's what we're looking to do here with Epiq Collective. Is you may not have $100,000 by yourself, but if you partner with 20 people that have $5,000, now we partner together and do it together, and we now have $100,000 to sit at the table. And so now we can sit at the table as owners together collectively. And that's what we're looking to build. So yes, we can build jobs, generational wealth, investment diversification, positive cash flow, direct asset participation in equity and returns. And you also can travel at your leisure at special rates. But we mainly, we help you to now have ownership access and not just be limited to, let me do this by myself, but we can now do this as a team. We are the active investors that work on behalf of our passive investors to make sure that they can take part in all of the benefits that hotel ownership and commercial real estate offers you.
Now, if you have, we, of course, and we'll open up for question and answer, but if you all are interested as far as in different projects that we would have available for you all to invest in, please reach out to us. We're on Instagram at Epiq Collective. We're on Facebook, Epiq Collective, and on Twitter. Please, if you have any questions, these are our email addresses. Jessica is at jessica@epiqcollective.com. That's her Instagram name, Jess Tip Jess. My email address is Davonne at epiqcollective.com or Epiq Collective on Instagram. Now, we do want to open, we have enough time for questions. We do want to open it up if you have any questions.